Hello, everyone. This is Rosie Hayer and Brittany Daly at Rivet Real Estate, once again bringing you an excellent market update. Now, December tells us a lot about how market has shifted and it has rebalanced itself. I bet everybody is wondering what's happening in the market, how much more the prices are going to fall. Well, there was a sales drop in December and a staggering increase in the number of days it takes to sell a home. Now, if you're interested in purchasing a property in today's market, now is a great time to meet your realtor and get into the streets and pick what's yours. A lot of home buyers were sitting on the sidelines and hoping and waiting that their day will come. I'm happy to announce that the market has shifted and you finally have options. See, Bree, when we listen to Mark Sprague, he's the State Director of Information Capital, and he pointed out in his economic forecast that the increasing cost of construction and the supply chain labor issues is going to constantly create that inventory issue that we have been having. I know there's a little pause in the market because inventory is up, it's taking longer to sell, which is a byproduct of interest rates being high. But even with the inventory gains we have seen during last 6 months of 2022, Austin still needs more housing. And this need is only enhanced as builders and developers continue to recover after overextending themselves during the market where we had increased interest rates. Like these builders, they were stretched out. They couldn't fulfill the need, right? So that shortage and high construction cost and supply chain labor issues is going to constantly cause inventory to fall in coming years. So there is a small pause in the market that you can go out and grab what's yours. Now, every time the interest rates have gone up, buyers have lost the buying power. Bree, what has been your experience with that recently with builders coming up with creative loan programs?
Builders and lenders right now are becoming very creative with loan programs. If we look at the past 2.5 years and the chaos that has been happening, if you weren't either cash or conventional with an extra minimum of $50,000 to $60,000 cash, putting 20-25% down, then you weren't getting accepted. Mm-hmm. Now, builders are offering big rate buy downs, right? Lowering interest rate. I just helped one client. This was primary. She was able to get a 4.75 interest rate.
4.75 interest rate. Guys, you must wonder, where are we pulling these numbers from? Because 4.75 interest rate was something back in early 2022. So Bree, I would love to take our audience today in that direction and show them the opportunity that's not often talked about on Fox News, CNBC, and TikTok and Instagram, right? So let's make numbers real today. I can't wait to jump into the numbers. So just know, guys, although December numbers are showing stabilization and it's showing more inventory, the real question you want to ask yourself is how long this is going to last, right? Because as soon as builders and lenders come up with creative loan programs, money will become easy in the market again. And the moment money becomes easy in the market, prices will skyrocket again. So Bree, without any further ado, I would love for you to give us an insight into what's happening in our region, city of Austin, Texas, Round Rock, share everything.
So when we look at Texas, this is for the month of December. The median sales price for December still went up by 3.7%. Mm-hmm. Again, this is for Texas as a whole, right? Mm-hmm. Our number of sales went down by 30%. That's okay. Average days on market went up 9 days, 57 days. So they were, homes were sitting on the market almost 2 months on average.
Wow.
Okay. So people were able to probably negotiate a bit, right? Even though if we look at year over year, we still had an increase. Mm-hmm. The number of new listings went down, active went down, pending down a bit. And here's what we want to look at. Our months of inventory actually went down 2.7 months. So we're almost sitting at 3 months inventory. And when we look at months of inventory for buyers, sellers market, balanced market, right? Anything that's 3 months or less, right, is considered, or 3 months, 3 months to 6 months is considered a balanced market. So we're sitting at probably a bit of a balanced market right now. All right. If we look at Texas as a whole. If we look in city of Austin, I'm not sure if everyone has been keeping up with our market updates, but this is the first time since we've been doing the market updates that we did see a decrease in our median sales price.
Say that again, Bree. How often did we see this change?
We haven't seen it. We haven't seen it all year.
So what you're saying is that with 50% decrease in sales and average days on the market literally tripling, our median sales price is only adjusted by 4%?
4%.
Guys, this shows how resilient market really is. Wow. Keep on. This is awesome.
Yeah. Our days on the market went up by 28 days in Austin. All right. So again, we're still looking the same as we are whenever we're looking at average days on market for Texas, right? We're still around that 60-day mark. It's taking about 60 days for people to go under contract. New listings are down 24%, pending down, active listings went up, right? Because our days on market are going up. And our months of inventory at 2.1 months. So we're still not at that 3-month mark, right? But we did get up a bit by 1.6 months. So that means we were sitting very low and extremely low in inventory. I mean, it was very scarce to find a home. If we look
when you say that, it seems like a person who is in the market to buy a home may not know that if they can buy a home now, unless they really go out and check out the inventory and compare what their payment would have been in 2022 with lower interest rate versus what their payment would be in 2023 with higher interest rate. What do you have to say on that?
Here's what I've been seeing a lot. People are thinking my interest rate is higher, my purchasing power is down. What am I going to do? What we have to remember is, will the monthly payment be slightly higher? Yes. But remember, if you bought a home in 2021, 2022, 2020 at some point, more than likely you were spending over asking, and not only spending over asking, you were coming up with cash out of your pocket of that over asking, anywhere between $20,000 to $100,000 cash.
Wow. And that cash was not bringing their monthly payment down, was not increasing their equity, nothing.
No. So now you have a unique opportunity, especially now when we can negotiate and I have some numbers we can show later, but where we can buy the interest rate down, all right, and utilize the seller's funds, okay, negotiate the seller to pay for our buy down of our rate and get our monthly payment to something that feels a little bit more reasonable while also negotiating off of the price of it.
Would it be okay to say in today's market, when you just stop following the news, it is something so powerful a buyer can do, which they never had access to in last 2 to 3 years?
Yeah.
Wow. Okay. How's Round Rock doing?
Let's look at Round Rock. So again, first time we're seeing a slight decrease, and we have a median sales price of $457. We went down by 3% year over year.
Yeah.
Okay. Our average days on market went up 47 days, 73 days on market.
Wow. So you may not know if you might be open to considering something unless you really go into the market and check the inventory, sleep on it, and write an offer with a clear mind. Like, you may never know this opportunity if you're following the news and you're just going off of the TikTok feeds. And if you're just looking at on all the tech layoffs that are happening, right? People are just scrolling it and believing it, scrolling it and believing it, where you can just stop following those news and get back in the market and see it for yourself. That's what you're really saying.
Yeah.
Okay.
And again, most important thing, we went up by 2.1 months to 2.7 months. All
Yeah.
right. 7 months inventory. Again, we're sitting in that balanced market, which is, it's a good time for buyers. It's not a bad time for sellers, right? So you're able to negotiate a really good deal if you are on the buying side, and you're still able at this point, if you are selling, to take the equity out of your property.
Wow. So, you know what, Brie? I would love to draw this comparison. It's very helpful to see what the market is doing at a Texas region level, then shrinking down to Austin and local suburbs. And there's a consistent pattern in all of them. All of them have hike in inventory, hike in days on the market to sell, and hike in active listings. And yet the median sales price have been sustaining really well. That makes me wonder why. Why is median sales price still sustained when everything else has doubled and tripled in inventory and auctions? It tells us how resilient the Austin market has been. So even if people paused, they didn't pause for this long, they still came back in the market. Lenders became creative, sellers became creative, they became flexible with their price.
They became flexible.
And Brie, what did you say in the last week's investor email? List price is no longer the sales price. How cool is that, guys?
All right. What we have to remember is sellers are willing to have conversations that they weren't willing to have the past 2.5 years. So before, you would go to them with an offer, and if it wasn't, giving them your kidney, they would say no. Right? But now they're able to say they want to get out too. They want to grab their equity, and you can still negotiate a really good deal. And there are things, one thing, Rosie, home warranties completely went away 2020, 21, 22, right?
What is a home warranty? For everybody who's listening, Brie, can you help to understand what is a home warranty and why is it important in a property?
Yes. So home warranty is basically for any sort of appliance or your HVAC system, water heater, anything that's basically not the roof, right? And not what your insurance is not going to cover. So insurance is going to cover fire and flood, right? Those kind of damages, roof. But anything else, your AC unit, your stove, your microwave, fridge, washer, dryer, some plumbing and electrical. If those kind of things break, your home warranty will come in and fix them for you. You normally pay anywhere between $500 to $700 for the year. And then they have a service fee of anywhere between $55 to $75, depending on the home warranty company. But traditionally, sellers would pay for the year up front. You give them an allowance, right? They pay for it, and that went away. And now it's coming back again.
So it sounds like what you're saying is that a buyer was capable of buying a property and get the warranty. So if any big ticket items like water heater, AC, big appliances, the highest cost, once the buyer has submitted a big down payment, to come up with these big repairs within the first years could be challenging for a lot of people. So sellers were often warranting the big ticket items for a year once they have sold the property. But during multiple offer situation, when people were going out and bidding 60, 70, 80K above asking, and they just bought this house, they didn't get to negotiate the repairs, and they moved into that property and they started carrying on their life. And it's a hot summer day in Texas and AC went out. What did they have to do, Brie?
They'd have to replace it themselves, out of pocket.
So they had to replace it themselves. So look at the liability people had to take on when the market was hot. But it was all absorbed because the properties were appreciating. Now there's a pause. So buyers can go out there and buy something that fits their needs. And if something breaks down, they have a warranty. And that warranty is paid by normally who, Brie?
Seller.
So the warranty is paid by the seller. They guarantee the property so you can sleep on it and not worry about coming up with a big expense within 1 year of buying a home. What a relief back in the market again.